Hello every single one of you and welcome in today's video. In today's video we are going to have a look at the funding rates and I'm going to explain you what the funding rates actually are and how you can use the funding rates in your trading strategy. Well guys, first of all it is very important to know what is now exactly the funding rates. Well, the funding rates is basically a fee that the trader has to pay for his or her position. And that fee can be either positive or that fee can be negative. And the positivity or negativity or the number of that fee is based on the ratio of the amount of traders that are longing a certain asset and the amount of traders that are shorting a certain asset. So when the funding rate is, for example, as you can see right here, positive, that means that the longs are basically paying the shorts, which means that there are right now more long positions open in terms of order size than short positions. The opposite is true as well. So when there are more short positions open than long positions, the funding rate will turn negative, and the short positions, they pay a fee to all the traders that are in a long position. And the reason why exchanges are applying a funding fee is to create a better balance in the markets between the amount of long and short positions. Every bar that you can see right here is roughly, it's basically 8 hours. And what we have here in the right upper corner is you have different types of funding fees, and normally the default is the average funding fee. This is a calculated average of all the funding fees that are out there, actually the most important funding fees. So there are a lot of more exchanges than just BitMEX, Binance and Bybit, of course. But in theory, these are the funding rates that historically have shown the most significance when it comes down to price prediction. So there's also other exchanges which sometimes have a very weird funding rate. There's a disbalance between long and shorts, and therefore we are not including those over on Whaleportal. So we can also take them separately. So these are, for example, the BitMEX funding rates with Bitcoin collateralized contracts. So all of these contracts are made, or these positions are opened with Bitcoin as collateral. Right here we have Binance. This is with US dollar Tether as collateral. We have Bybit, Bitcoin collateral, and we have Bybit, US dollar Tether collateral. So with the average funding fee, you will get a nice average over the markets, and you get the coin margin and US dollar margin contracts combined, which gives you a good basically a good perspective of what the ratio right now is. Are there more traders long? Are there more traders short? And how big is the difference, right? If the funding rate is just slightly negative, then it doesn't mean that there is way majority of people shorting. No, it just means that a slight majority of the traders right now are shorting. Nevertheless, it can still be a very accurate price prediction metric, and I will show you exactly why. So guys, how can we use the funding rates to our advantage when predicting the price of Bitcoin? Well, you most likely have heard of the phrase that the majority of the markets are often wrong, and right now you can see that very clearly with the funding rates as well. Generally speaking, when the funding rate is positive, the price tends to go down. And when the funding rate is negative, the price tends to go up. And I can show you some examples. So let's take the last example right here. The funding rates turned negative on the 18th of October 2022 at 2 o'clock in the night. Let's have a look what happened with Bitcoin at that moment. Then we go to the 1 hour time frame. Make the chart a little bit bigger. Then I make a arrow at 2 o'clock in the night. That is right here. As you can see, afterwards, after these funding rates turned negative, we saw the price going up because the majority of the people, they are shorting Bitcoin, expecting the price to come down. Bitcoin is doing the opposite and is going up. Then guys, let's take the next example right here. That is the 16th of October at 6 o'clock in the evening. We can see that we also got a average negative funding fee reading right there. Let's have a look what happened at the 16th of October at 8 o'clock in the evening, or actually 6 o'clock, sorry. That is right here. As you can see, the funding rate turned negative right here. That is a very bullish sign, and just a couple of hours later, the price went up. Here, the funding rates actually turned positive again. Then the price went down. Right here, the funding rate turned negative again, and the price went up. It is very important to note right here, guys, that this is the average funding fee, which is so important. So it is not that much of importance to look at all these funding fees separately, but the average funding fee is a much more stronger metric. Then guys, let's have a look at another example. This is the 12th of October, actually the end of 12th October, beginning of the 13th of October, going on till the 14th of October. We had a period of negative funding rates, and what we can see in the price action is the following. It was at the end of the 12th October right here when the price actually went down with negative funding fees. And eventually we did got a massive bounce and the price retraced to much higher levels. And something like this, guys, can occur, of course, when the funding rate is slightly negative right here. It is still possible to get a form of a fake out and then still see a reversal. But it is very less likely for the price to have a decisive breakdown with negative funding rates, because that would mean that the majority of the traders would get rewarded. And you can actually also see that the funding rates generally were not crazy negative, so this is just a slight negative funding fee. But when they turned a little bit more aggressive negative, so this was the 14th of October at 2 o'clock in the night, right here, right before this massive pump in the price, we have seen that extreme reading in the negative funding rates. So there you can already see that generally the negative funding rates tends to drive the price up. But if you get an extreme reading, it is a very good short-term predictor of what is going on with the price of a certain asset. Then guys, let's have a look at some positive funding rates in this example, and let's take this block of positive funding. This started at the 5th of October, 6 o'clock in the evening, and yeah, it was quite a period of positive funding if you look at the past couple of months, but it's going on till the 6th of October, but basically starting at the 5th of October at 6 o'clock in the evening. What happened back then? The 5th of October at 6 o'clock in the evening, that was right here. Here, the funding rate started to become positive and remained positive for a period of time. And what you can see is that actually the price didn't really broke out to the upside. No, the price tend to trend to the downside due to the fact that the majority of the people and traders are actually longing. And guys, what we see is that the funding rate remained positive over a period of time, and that during that period of time the price tend to trend downwards. Then guys, let's take another example. Right here we got a 3 October, 2 o'clock in the night, quite extreme negative funding. Let's see what happened in the price. That was the 3rd of October at 2 o'clock in the night. That was right here. As you can see, that was the start of a massive rally in the Bitcoin price. We rallied from those levels roughly 7% in just a couple of hours time. And yeah, the funding rates were one of the first metrics that basically show us right here, okay, the funding rate turned negative, the price comes down, funding turns negative, which means that the majority of the traders expect the price comes down because they are selling Bitcoin. But eventually that doesn't happen. Bitcoin is hovering over support and then just makes a massive rally to the upside until the funding rates are turning positive again, and then we are seeing the price coming back down. So guys, this is how powerful the funding rates are. You could actually trade all of these moves, or at least know the price direction of all of these moves, just only based on the funding rates. You didn't even had to look to the price charts. Just based on the funding rates, you could actually predict the price direction of Bitcoin. Right here, the funding rates were negative. During this period of time, the funding rates were positive. During this period of time, the funding rates were negative. Here, the funding rates turned positive. Here, the funding rates turns negative again, and we go up. So this is actually how powerful the funding rates are for your trading. But guys, there's definitely a catch to this metric, because the most important thing from this metric is that you can look at historical moments when the average funding fee was positive or negative, because in different market conditions, this metric can behave differently, or at least the price can behave differently based on these metrics. So when there is a bear market, a very clear bear market, the start of a bear market, funding rates can be negative, but the price still can come down. And the same is when we see the start of a bull market. When the funding rates are positive, the price still can go up. So that's why it's so important that you can see the historic funding rates right here. So in order to know in what kind of market that we are trading, you can just take a block of these funding rates. You can take a couple of negative funding rates, put them over the chart, and look what the price of Bitcoin did. Went the price of Bitcoin up with negative funding rates in the past couple of months, or the past months, or in the past weeks? Then most likely it will go up right now as well with negative funding. Did the price of Bitcoin go down with positive funding over the past couple of weeks? Then if we have positive funding right now, most likely the price will come down as well. That's why if you just know the funding fee, you still don't really know what it actually will do on the price. Of course, generally negative funding tends to be bullish, positive funding tends to be bearish. But it is very important that you indicate the market that you are trading in. So therefore, it is very important that you can see the historic funding rates right here, which is only visible on Whaleportal. Other websites are not really showing the historic funding rates. They're just showing the funding rates that are right now. And they're also just showing it per pair, so they don't show the average funding fee. That's why this chart separates itself from all the other websites, because here we can see the historic funding rate and we can see an average of those funding rates, at least from the most important funding rates. So that is very important and very powerful in predicting the price direction of Bitcoin. And as you can see, right here, we just added Ethereum to the chart as well. So you can also find the funding rates separately, but also the average funding fee over on Ethereum right now on Whaleportal. So guys, that was it for today's video. I hope you all enjoyed it. I hope you learned something on how you can use the funding rates for your Bitcoin trading. If you like this video, if you learned something, make sure to smash up that like button. That is very much appreciated. If you have any questions about this metric, you can ask them in the comment section down below. I'm happy to answer any questions. And yeah guys, I wish you all happy trading. Don't get wrecked, and I'll see you all in the next video.